have a quick chat now about self-builds, because in fairness to you guys, I see your logo behind you, the Mortgage Masters, but you really are, in my experience, you really are mortgage masters when it comes to self-builds. This is your niche. This is your kind of, you know how to do this really well, don't you?
Yeah, we do, and I think it's the volume of stuff. We have offices around the country, and 80-90% of their business will be self-build mortgages. So, which is, when you're doing that day in, day out, it's, it brings its own, not challenges, but your experience and what you learn from that is huge. So I think, we definitely have our finger on the pulse in this space, and I think.
I actually had a couple in the office yesterday looking to where to go self-build, to where to go buy a house. Now, to be honest, I don't buy a house. I think a self-build is probably one of the most stressful things anyone can do. I haven't done it personally, but I know from dealing with clients over the years. But what I will say is that if you're in this self-build space, forget about interest rates. I always talk about interest rates and go for the lowest interest rates. What you really need, in my experience, is a bank that will actually help you through that process and be able to get your funds released quickly to pay your builders and know what they're doing. So a lot of banks out there might promote that they can do self-builds, but they're probably going to forget about the money and the interest rates in this example. You really need, as a couple or as a single person, whatever your situations, you really need a bank that's going to support you through the self-build and know how to handle it, and advisors that know how to handle it. And too many times I've seen clients go absolutely insane because the bank don't know how to handle self-builds, or they can't get them through the process quick enough. And it's like pulling teeth trying to get money. So I suppose I will throw bouquets at you in this one. And this.
No, well, look, there's banks that actually don't do self-builds. Yeah. So there's a reason,
There is. So look, let's go through the self-builds. Yeah. So I'm let's say go back again, self-build couple, and we are thinking of doing the self-build, self-build route. Can I give you maybe, Dennis, not to throw you off on this, but can I give you a couple of examples that I'm seeing and ask Paul? So what I get is a lot of people saying they were gifted the land by their granddad or their dad, and let's just use an example of somewhere roughly, and they have an acre of land and there's no planning on it yet. So let's just talk us through the issues that we're facing there.
Right. So first of all, we don't do any lending just to buy a site. So it's not possible to go and buy a field. We will only do the build of the property itself. It's really good for people who are getting gifted. They're getting gifted usually a valuable piece of land, and then when they go through the planning process, it maybe doubles in value after they've done that. So you can come, once you own that, you can do the mortgage, we can do the lend, and we can do the build. So a couple of things on if you're gifted.
So what you're saying, you have to have planning, Dennis, or what's the?
To proceed, yes. Yeah. Like you could get mortgage approval prior based on subject to planning permission.
Okay, so you could get an approval in principle with you guys to say, this is what we're planning to do with this piece of land, and then go for the planning.
Correct.
Okay, very important point. Okay, excellent.
But I think a big piece of that is that a lot of people would have ideas in their head. I'm going to build a house for 200,000 or 300,000. You actually need to go through the costings and meet a builder and go through specification. That's what you really need to give a true reflection of what the cost is going to be. But if you're coming with a site in site value, we can do 100% of the build costs. We can actually lend 100%. So you come with your site, and if this build is 250, we can lend 250,000 for the build.
Once you qualify your 3.5 or your 4.5, let's say the 3.5, exactly. Your income has to qualify for the 100%. So basically, you're allowed to use a deposit as your land in this case.
Correct. Right. And again, it has to be 10% if you're a first-time buyer, 20% for a second-time buyer. Okay. So
now, I've had experience with other banks in the past, obviously from being an intermediary broker, and they require you to still have 10% cash, which is pointless in my opinion, because your land is your deposit. Now, it's a valid reason they want it for overruns, as we all know. If you watch any Home to Improve channel or any self-build, everyone runs out of money. Exactly. So it's a prudent thing. But talk me through how you guys overcome that. Or what happens.
So there's a contingency. 10% contingency is more or less across the board, and that's just coming from experience, and it always happens. So there's a couple of things you can do. So a lot of people, when they get a site, they pay for architect's fees, they pay council fees, different things like that. They're all paid prior to starting the mortgage. They're all fees that are recoupable or able to be built into that mortgage cost. So effectively, if you've paid out 5,000 or 10,000 to get architect drawn up and to start the process, they can be incorporated into the mortgage, and they effectively then can be offset against your 10% contingency plan.
Okay, excellent.
So, but you do need, you can't come empty-handed, because not only the contingency for the build, there's still legal fees that you can't fund, there's still stamp duty. So whilst it's really good on the bit. Exactly.
Talking about overshooting a little bit, Dennis, this is a trick that some people do. So let's say you have a build cost with the builder and it's 300 grand to build this, whatever house it is.
Yeah.
If you qualify for, say, a 350 mortgage, are you allowed to overstate it or build it in and then take less if it comes in as less?
The mortgage will be based on your costings that you provide, and their costings will be signed off by a builder, let's say.
Okay.
So,
well, can they include?
Yeah. Not as a contingency, but what a lot of people do is they would be able to go for the higher spec finish, the higher cost, and reduce it back down from that point of view. So this is my wish list. This is what ideally, but I'm going to cut costs on the garden. I'm going to cut costs on the finish here in this part. And there's ways then to reduce the overall build cost, and even have an approval for that higher amount.
Yeah, and again, what I'd say at this point in this for people is that, again, in my experience as an advisor here, is that I know that everyone hates this word. It's a case by case basis, but when with self builds, it really is. It's something you want to go into somebody who is. I hate the mortgage master thing.
Use something else.
No, but you really want to go into somebody who knows what they're talking about. Experience and can help you, because it is so stressful doing the self-build thing that you don't want to be messed around by the bank, or you don't want to run out of money, or you don't want to. So, like I said, I can't highly recommend going to Dennis and going to the EBS and making sure you get that sorted in that way, I suppose. So
the stage pay, there's a couple of things. So stage payments. So the stage payments are worked by pro rata. So the work has to get done first, and then we release the funds. So the builder gets the floors in, and then we release money to pay for that. It's staged right up to the end, and there's usually a 10% retention held on your mortgage. So 250 mortgage build, we keep 25,000. That's held until there's a final valuation completed and the last of works is done.
Brilliant. Okay. Again, very, very brilliant information for people to know, because not many people will know that out there. So that's absolutely brilliant. And then that final valuation is obviously just done by an approved valuer that you guys have to go out and view the house.
Exactly. They would out on day one when it's a greenfield site, and they would know the proposed build, value it then, and then they would just more or less confirm it at the other end.
And what's the biggest problems you find for couples when they go down this road, or for people? Everyone's a couple, but
it's a long road. It's a slog. It's a 12 months. If you're starting and you haven't gone through planning yet, you're maybe looking at 18 months. So it takes commitment, patience, the whole lot. There's an architect, there's a builder, there's a solicitor. And if you're buying a house, you get the money and you buy the house. But maybe there's 5 or 6 times throughout this where you're back to your architect, back to your solicitor, back to the bank to try and release funds, back to a valuer at the end. So and there's the added pressure of the build, which we can all see on the TV programs that comes with that. But then you have you're living somewhere else, so you're not living in this house. So then are you paying rent? Are you living with family? And then you have a mortgage payment kicking off then as well when the mortgage starts coming down. So
actually, talk people through that. When you take your fours, let's say it's a 200 grand build, and just say for example, we're doing 4 drawdowns, 50, 50, 50, 50 at the end, or whatever, 25, 20 grand. For the contingency, but talk them through how that actually works for the payment point of view.
Yeah, so a couple of things. There is an option you can go interest only for 12 months.
Great. So
basically 12 months, that should see you out through the build, and you just pay the interest on the mortgage.
But you're only paying it on your drawdown, the first 50 for that 6 months. And then the second, so you're paying a 50 grand mortgage, then a 100 grand mortgage, then a 150 grand mortgage. And
only at the final stage will you pay your full repayment. So
if you don't go Sorry, it's very important for people to understand, folks, in relation to the cash flow management that you have, especially if you're going for the mortgage. If you are renting, as Dennis said, or if you are living at home, you're fine, obviously, if I'm not paying much. But if you are in a current rental situation, you have to keep paying your rent, and your mortgage payments are going to keep coming in. So you don't want the project to overrun, because it's going to really eat your cash flow and become an absolute pain in the backside, a disaster for you.
Yeah, but when people get through and they have the house of their dreams and it's worth twice,
it's priceless.
Fantastic for us,
And again, those programs show the happiest couples at the end of the process.
After killing each other off,
they want to murder each other during it, but then they're the happiest in the world. Okay, excellent. Look, Dennis, that's brilliant. And that's a lot of information for people that are going through the self-build process. And I don't think they get that kind of straightforward advice anywhere. So I'd like to bring it, and thanks for that. Great. Sorry, before we finish, anything else on self-build? Sorry, just not missing anything there on self-build you could think of, are we?
No, the costings is a big thing. So a lot of people say
furnishings. Sorry, that's cool cross you. The board I have my there. So the kitchen, I want a 50 grand kitchen or a 10 grand kitchen. As long as I can afford the mortgage and that, it's okay. Is it, or what is not included?
No. Soft furnishings and appliances are not included. They're not included in the bill cost. Kitchen would be, landscape in the garden would be, but actually not your couch, your TV, and your Neff washing machine or whatever. So.
Okay, brilliant. Plug. Excellent. Right, okay, so brilliant. Again, guys, we're going to shout out the email. Don't be going directly, Dennis, hasn't got the time for this. So it's ifsc@mail.ebs.ie. It should be appearing on your screen at the end now anyway. But again, it's like Dennis has time to deal with you all, but we want to go through this the right channel, so we can find out who's a quick question or who actually needs a meeting with Dennis or one of his team to actually get a mortgage in place. So to be fair to everybody, please direct your questions to the EBS email address, which will be on the end of the screen.